everyone, welcome to StoryTrading special presentation. We got CEO of Aehr Test Systems here, Gayn Erickson. We've had him on several times. We've been with him since the stock was $2.50. So we appreciate you, Gayn, that you still give us some time, as now you're not just a little micro cap company. Your stock's like worth almost $500 million right now. How do you feel about that?
I feel great. Yeah, it's nice to be a nano cap, it seemed, I think, at times. So, and yeah, it seems like you called it pretty well in terms of just the recognition of what was going on with respect to electric vehicles. And that is seemingly what we spend most of our time on these days. It's really exciting right now.
Cool. That's great. And I want to start with a question I've never asked you before, but like, do you look at the stock like on a day like today? It's up 20% when the market's down 3%. I actually have a list of semiconductor stocks, like 25 of them, and Aehr is the only one that's up today. Like, how do you look at that?
I mean, candidly, I, like other people, have my own portfolio, and I think out of habit of anything else, I tend to open up the stocks and look. Mostly in general, I fortunately I don't try and, grind over what our stock price is doing. I really don't, but I am aware of it. And certainly after earnings. And yeah, I think mine has, I think about 50 stocks, and they're all red except for Aehr today. So.
All right. Well, congratulations. So I want to start with an interesting question. Why, I noticed, I think there's only one analyst covering you guys. I think Craig Hallam. That's really unusual. We do a lot of microcap coverage, and there's plenty of companies with much smaller market caps than you that have many, many analysts covering them. You only have one when you're in such a hot space, growing fast, $500 million market cap. Why do you think that is?
I think it's a couple of things. We are in discussions, and I meet regularly with, I would say, at least a half a dozen folks that are, you call it professional analysts, that have not picked up coverage with us yet. I mean, dinners, presentations, we've done things with Needham, we've done things with, invitation with D.A. Davidson. We've had a number of companies, and for whatever reason, they have not picked up yet. I don't want to be, too concerned over this, but, the reality is even though there are these Chinese firewalls and all between the banking side of the business and the investment analyst side of the business, it's still pretty common practice out there for, when there is a banking relationship, that oftentimes the other side, even though there's a Chinese firewall of the house, will pick up coverage. We're not out raising money. We have lots of people that would love to help us raise money at these price points and we've been unbelievably frugal for a very long time. We did do an ATM, which is an at the market raise last year, which the bankers all hate because they don't.
Which we love. I love that.
And they don't make any money on that either. In that case, we had already had a banking relationship with Craig Hallam. Again, that is not tied to their analyst coverage. But we ended up going through them. But if an ATM, there's really no banking involvement. It's more like there's no underwriting or anything along those lines. So the reality is we haven't been raising a lot of money, and I think that may have something to do with it, even though it's not supposed to. But we have a lot of folks that are paying attention and watching us, and candidly making recommendations to their clients and their portfolio, but they aren't doing, I guess, officially, which is kind of interesting to me. But I don't, again, that's not another thing. I don't really get up. Each analyst takes a lot of time to just make sure their models are up, et cetera. If I had a dozen analysts right now, Ken and I'd be spending a lot more time working on that than we are working on customers and our business. And so I don't really fret over that.
Okay, great. Thank you for that insight. Appreciate it. So yesterday you reported top and bottom line beat, I think 5-cent EPS. I think your revenue came in like a couple million, maybe over the estimate Craig had. So great report, obviously, from a headline perspective. So I was listening to the call yesterday, trying to tease out if there's anything new, right? Anything new we can learn. There was something you mentioned that I'd like you to clarify a little bit. I think you said there was a new customer that went from 0 to an order in 4 months. That was like,
right.
Tell us more about that, because it sounds like you said that was not a silicon carbide?
Well, good sleuthing there, Ben. In fact, Ken and I had a conversation. It's like, Gayn, it looks like that's sort of just embedded in there. Why isn't that at the front lines? And we had a whole conversation about it. About a week ago, literally, I don't even know. We got an order from a customer that we had our first conversation with like 3-4 months ago. It was during the summer, and I mean, it went from an introduction between someone had introduced me to their CEO. I had a phone call the next day. I had their entire executive staff in our building within a week. They have been fully engaged with us, and they have basically communicated their intent. And I said that in the press release, to place an order for a system, and they led with placing orders for wafer packs. The interesting thing about this, it's a large semiconductor company, multi-billion, and there's about 30, 40 companies that are that size. So it's, they're not totally exclusive, but they have not publicly introduced their intent to build MOSFETs for the electric vehicle market, but they're making wafers because I have them in house, and they want us. They're absolutely convinced, as others, that they need to do wafer level burn-in. They're actually quite intelligent. They're automotive qualified. They know a lot about this. I can't get into why. They're an appropriate company to be doing this for a living, but they're quite intelligent on their needs and went immediately to, I believe you, okay, and said, let's go. And so they've ordered the first couple of wafer packs on a couple of designs. There's more coming. They're planning to buy a system too, but they're like, go, go, go. And so I think that the key here is each of the conversations we've had with customers is shortening. I think originally it was, can wafer level burn-in even work? Is silicon carbide the real deal? Does silicon carbide need this burn-in? And now people understand it not only does that, but it needs to have this stability. And can Aehr solve that? The reality is, they now can watch what's going on. Most people know who our lead customers are, which I never say publicly, but in our 10% filings, everyone has figured it out. But they're just like, sure, let's go. And once they realize they're not the first people to have to go through whatever learning curve there is, we can. They give us the order. I'll be testing their wafers, I think, at the end of November. This is effortless for us. And so that was a good catch of how these guys are, things are moving faster with follow-on customers.
Okay. All right. That's and this customer is one that doesn't, they haven't sold to the EV market yet, but they're planning to. Is that what you're?
I believe they actually sell to I know they sell to automotive suppliers today. So in that sense, they're qualified. They have qualified fabs, et cetera. What I'm saying is, if you knew who they were and you went to their website, you would find no reference to them building these MOSFETs. So that's something they plan to do they're very serious about it. But the novel piece of this is, I have been alluding or specifically stating over the last couple of quarters that we're not only talking to the big guys and small guys that have publicly announced their intent to be in silicon carbide, but we're talking with some companies that haven't even announced yet, including some big guys. By the way, the last time I said that, I wasn't referring to these guys. That was a different company. So there's another one out there as well. That company, interestingly, showed up at one of these summits, but I happen to know they haven't publicly announced their intent to be in it. So I thought it was kind of interesting. I had a chance to talk with the guys over some coffee a few times. So I'm sure people were wondering, now, why are you here? So, but I'm not going to repeat their name either.
Okay. So a nice interlude to my next question. You said this customer, 0 to 4 months to that order, they just believe you. So what's the difference between that process versus the second major customer? You put a PR out a few weeks ago that there's some, I assume there was already some sort of process and validation. You've been talking to the second customer for a long time. Yet when this PR comes out, it seems like there's another phase of validation that's going to happen until May. Can you tell us why the second phase?
It's not going to take till May, but we kind of just put a window out there. So, I understand some of the difficulty in doing this, and as I kind of deeply inhale and it has more to do with some of their own technology and some of the things they're doing, and it's very private to them. But I will say the following. In MOSFET testing, in the silicon carbide MOSFET, and we've now kind of seen a cross section, basically, of what everybody thinks in the world at this point. The attorneys warned me to say, don't say you know everybody, but okay. I mean, we basically talk to everybody that matters. There are, and the physics of silicon carbide, there are certain types of what we call stresses that will induce failures. And if you follow the call last night, it's a really good analogy that works for people. Electronics and water are good ways to think of analogies between it. A silicon carbide MOSFET is a switch, okay? And the way to think about it in a water analogy, it's a valve. It's the valve that turns water on to flow, okay? And on one side of the water is a water tank with water pressure, and the other side is the output. If you turn the valve on, the water flows. That's all a MOSFET is. If you turn the gate on, the electric current flows from top to bottom, okay? So it's not a very complicated device, but it turns out that if it is not in the manufacturing process, and particularly in the defect density related to silicon carbide, you can't make them perfect, okay? But you can, some of them that are not perfect will still function, but over, say, the first couple 100 hours or so of use, they'll actually fail. That's a big problem. This particular valve that goes into the inverter of the cars, if it were to fail, the inverter will stop working and the car won't run anymore. This is what we call a walk-home event, okay? So you need to get rid of those. So one way is you build up an inverter and you run it for 200, 300, 400 hours. And if it hasn't died, it will be okay. It's called the infant mortality rate of these devices. Well, that's really expensive and that's not okay. So what you can do is you could put it on a test system or electrical bench, and you could also run it for 200, 300, 400 hours, and you could see if it works. And if it hasn't failed by then, it'll actually be a good device. Now, what we do is we actually do a stress test, which is effectively, instead of taking 200, 300 hours, we can do that in maybe 100 hours, okay? Or we can do it in 10 hours. And depending on how much pressure you will, or in this case, the analogy I use is the valve. If you look at the valve and you turn it on, we actually turn it on and push it down really hard, okay? And if you actually overstress that with a certain amount of time, if it doesn't break within, say, 10 hours, it's never gonna break. That's actually what they call a gate stress. Okay. The other one is there's a high side stress, which is a kind of a pressure test. We've extended with our enhancements yesterday to add a high side pressure test, which interestingly, many companies today do not do that in production. It's actually a very delicate test that's more done in qualification, but there are some companies that want to do it in production or want to do it for some devices and are moving away from it. That's what we call the high voltage option. We have customers that have ordered that and are intending to use it, but long-term get out of it. But for us right now, we're fine. We'll give you the tools to do what you need. There's other types of devices like diodes and GaN devices that is the primary way. So the enhancement we did yesterday allows people to add, it allows us to add more customers and more types of devices. But it also allows certain silicon carbide customers to feel good about having our tool be used for the characterization qualification, perhaps the early manufacturing, and then they'll switch over to the gate. Now, why I said all that is when we've been working with a couple of the large customers that we've been announced we were engaged with over the last year, those two customers wanting to do something slightly different than what we were doing, okay? But they also want to do something different than what they were doing. It's kind of I know it's elusive. So they wanted to move to our system and prove that our system could, by using these enhancements, do something to avoid doing package part burn-in at all and be fully qualified. So we have been working, and those two enhancements have been validated at our factory. And I realized I hadn't said that yesterday. That's not that it's not material. I mean, I don't believe that to be material, but that particular lead customer, the second one, they were already validating those two options in our factory. Once they saw that, they were good to go. So now what they did is they bought the first engineering system and they plan to buy the production systems. The terms and conditions of the first order say the engineering system, it must work. And candidly, I think we've overdone it, because the reality is every order you place with us, if it doesn't work, you can get your money back. Okay. But the reality is, the way we described it is, we're going to be validating and getting it to work over the next few months. I think I said 3 to 6 months, and the attorneys were really clear. You need to write it that way.
Okay. So then let me clarify here. From the customer perspective, forget about the legal part. Are they still? Is there some still doubt? Is there something that could go wrong? Are they still testing something here?
I think there's always the potential scenario that what they saw at our facility isn't going to work exactly like that in their floor.
Okay.
But I will tell you, I did not announce that those new enhancements or that order until I was confident, dude. I personally have watched that the high voltage is working with this arc suppression, which a lot of that's aimed at my customers. If you're a customer in this field, you're like, ooh, that's awesome. If you're an analyst, you look at these high voltage and these, I don't even know what that means. But if you're in our space, that's an incredible introduction. And if you're a competitor, you're not happy, because the only thing that we didn't have was the high voltage potential option, which most customers didn't care about. But now that we've checked that box, there's really there's no chinks in our armor, if you will.
Okay. All right. So it's about, you say 2 or 3 more months of validation, you think?
I think so. I mean, that's when we'll have it. That's when we'll have both the engineering and production systems fully, wrung out, et cetera, and have shipped them. Yes.
Cool. All right. Awesome. All right. So next question related, by the way, if anyone in the audience has questions, you should put them in the chat starting now. I'm going to run out of questions soon, but, I want to get, I know you don't provide guidance for next year, so I'm going to ask in a different way, just to get a sense of the relative size, because you're talking about this is another major customer. You already have one major lead customer. So when this second major customer ramps, can we expect the revenue coming in from the second major customer to be similar in size to your first lead customer?
Yeah, that's a good question. Right now, we're kind of working through that, but it's our belief that the typical test times of these silicon carbide devices are all going to be similar. Now, if you talk to a customer, they're all saying, I want them lower, and I want them lower than the other guy, and I get it. And our projections for TAMs and SAMs all are based on test times that are lower than actual today. So we're already being conservative. Okay. So, but I will tell you that when you talk to companies, and I alluded to this yesterday, they'll often tell you their test times are, I'll just throw it out there, 6 hours. And we're looking and going, I'm testing your devices, or I'm seeing your wafers, and you've still got failures out at 18 and 24. How is it that you're going to do 6 hours? Well, we're going to try and balance between how much quality there is and how we ship, and very interesting conversation. And people usually don't talk about that. It's like, well, why wouldn't you test it to 48 hours and make sure that the devices will last forever? Well, the automotive is only going to last for 20 years. And if it fit. So people are riding this interesting line. What my experience has been is, as we get closer, their test times go up. They start to realize how important it is, because honestly, in many cases, they've never even seen this data. They don't know. So I've shared this before. One of my favorite things that we do, and Vernon allows me this, when we present the data to the customer of their wafer, I do it. It's my favorite thing, because I show them the data and I show their devices that are perfectly stable. And then all of a sudden, out at 10, 12, 24 hours, some percentage of them start wobbling, and they all look at they're like, what is that? I go, that's your device. They're like, okay, that's not good. And then about, at 1 hour and 4 hour and 8 hour and 24 hours, the device fails. So then I'll zoom in on it and I'll point out, there was nothing wrong with the device. There was no wobble. There was no indication. It was a perfect glass rod. The only way you would notice that that thing was going to fail is when your car stopped running. And so we say you do not want to stop your burn-in until those stop failing. And so that's usually sets the test time. And when I engage with customers, they're always thinking on the low end. And when I'm done with them, they're always on the high end. So my expectation, long story, is I would think that for every number of wafer starts, most companies will be buying the same kind of capacity. So given my lead customer has bought fairly significant amount of capacity, and this is just the start of their overall ramp over the next decade, most customers will be similar. That's my opinion.
Okay, great. Thank you. Question just came in the chat, which I had on my list, so I'll jump to it now. Is you mentioned yesterday that you haven't done any price increases, and you said, I'm not going to play that game. Can you tell me what you mean? What game is that? And
so
why
I'll tell you what, I just have this probably emotional response to people saying, oh, COVID, I've got these things, I need to raise my prices. I have said, we all have tons of friends. I live in Silicon Valley. I have a lot of friends in the semiconductor market, close friends, okay? And some of those, which if I name the names, you would totally recognize as semiconductor suppliers. But I'm talking at executive management levels. They just simply raised their prices because they could, and that's their vocabulary. I just could. So why wouldn't you? And you might say the same thing of me, and I have an answer to that, but that's not the question right now. So some of them are my customer or are my vendors, and they just simply raise their prices, and it upsets me. Okay. And in the semiconductor, my ability to have leverage is not very good. But I've had some distributors that raised their prices, and I went and escalated and actually got semiconductor companies to say, okay, just kidding. Now you think that's bizarre that I have that kind of leverage. But if you just press on them, a lot of times it's just, let me just try and raise my prices. Now, with my suppliers, my chambers and blades and subsystems and electromechanicals, et cetera, I'm super intolerant of that. I had a customer a vendor came to me and said, listen, I need to raise my price of this subsystem. Why? Because the aluminum, my vendor says this aluminum costs so much. I said, great, I'll buy the aluminum. He's like, what? I go, I'll buy the aluminum. Give me how much it is. I'll buy it in bulk for you. And he came back and said, just kidding. Okay. Like, no, I don't want to actually justify why I'm doing this. So I've made that really clear with my procurement people as well. I just don't do it. Press back and say, no way, find out what it is, and then go buy it if you need to. And we've been able to keep basically all of our costs the same. The one thing that is really sucked, sorry, great word, but is shipping. One of our suppliers for our chambers is actually in Singapore. And last Christmas, we were shipping a couple of chambers, and we normally can ship them over by sea for about $2,000 a piece, or by air for $10,000. I wrote a check for $92,000 to ship two of them to me. It was crazy. Now it's come down substantially since then, but I didn't pass that along to my customer. I did mention it to him, and I got some kudos for it. But that's not. We're just not going to do that, and you can count on us. And now, will our prices go up over time? There may be some of that, and there's some things with value that are going up, like the BV is more expensive than the original one because it is more valuable too. But in general, we make good money, and we're going to make really good money with volume. And our customers get that, and they're not pushing back on us because we're so much cheaper than the alternative. And so I think we're in a good place.
I remember last time I spoke to you, I think it was right at the end of the call, we were talking about palladium, and then you get order a small amount and they wanted to raise the price on you. And I was like, hey, the prices already came down. So whatever happened with that?
That was a good point. Yeah, we use palladium on our micropoco because they're very robust. So we could do, they like 1 million cycles or so. And there was some, sword rattling, if you will, saber rattling related to that. And I said, I'll go in and buy that too. And they said, all right, just kidding. So, no one's listening to Little Aehr Test or their CEO, but I'm telling you, push back. And if the world had done that, we'd all be in a better place right now.
So let me push back a little bit now. When you're saying you're so much cheaper than the rest of the competition, you're saying your costs haven't gone up, that's why you don't want to raise the prices, but you certainly could, right? Is there something we're not seeing there? Like if you raise the prices, are you worried you'll lose some business?
So I'll be candid about why we price the way we do, and recognize that my customers can be listening to this as well. Two things. One is the way we're pricing it is not to be cheaper than the other guy doing wafer level burn-in. Okay, we priced it to be as cheap as package part. Okay, which is way cheaper than what most people think. So there's no debate about whether you should move from package part to wafer level. And by the way, in doing so, we were developing a new package part burn-in system with a high voltage option. Nobody's interested in it. But like, so I postponed the introduction of it. They're not, no, I want to do your wafer level. And so I know exactly what the cost to test is for package part because I can supply that as well. So that's the price point. Now, the alternative today to do wafer level is to put a prober, which is $250,000, a tester sitting on it, something from $200,000 to $800,000, and a $60,000-$80,000 probe card. And so this sort of $1 million test cell, and I think I rounded up a little bit there, but it's also physically the same size as my tester, and it tests one wafer. Okay, that exists out there. But it's not competitive. It can't scale. If you need 2,000 of those on your floor, you don't have a building big enough for it. So you say, well, Gayn, you just won by a mile. And the answer is, I did. But if somebody wants to start saying, well, I'm going to try and knock off Aehr, and I'm going to fight them in court over their IP, or they're going to try and build something more like us, which is a proberless system. We have a ton of patents. We've been working on it for 10 years. There's a lot of tricks that we do. It's not going to be easy for them to figure it out. But the other problem is, and they're listening right now, I have material costs that are 35 to 40%. So if you want to come at me and build a system, I guarantee you're not going to make it cheaper than me. And you want to go in and try and beat me, install base with an automotive supplier, and you say, I'm going to be 30% cheaper, then you're not going to make very good margins. And if you're a normal ATE supplier, you would never go after a market where you tell your boss, listen, I'm going to go spend $80 million to go build a product to compete with Aehr. And when I'm done, I'm going to have 30% margins or maybe 25. So this is a really defensible price point, we think. And our intent is to keep it that way. And as volumes go up, we're actually also not discounting very much. That's not the point, or at all. And we'll be able to make very good operating margins. The customers will not be offended, and it will leave very little room for competitors to come in.
Got it. So that's really the bottom line is you're strategically doing this to make it unattractive for competitors to come in.
Yeah, if I went in at 90% margin, I'm telling you, I got some customers that pay for it. Okay, but they would be screaming and kicking and trying to figure out, and they would be asking someone else to go build an alternative. I have customers right now are not asking companies to build an alternative. Mm-hmm. They're like, Gayn, can you build enough? Just tell me you're going to be able to build enough for me.
Got it. Okay. I got my last question, and then we'll finish up with the chats and the Q&A if there's any more. So put your chats in there if you have questions, or you can raise your hand if you want to ask Gayn directly. But my last question is maybe two-part question regarding the macroeconomic. So with everything that's happening in the economy, if we are to assume there's going to be decreased consumer discretionary spend and maybe less people buying Teslas, to what extent does that impact your revenue on the volume side if there's less EVs being produced and sold?
Well, I don't know that anybody, including us, has fully internalized how big this could really be if everybody starts shifting to EVs. So I would say that explosive growth would be lower.
Long term. No, I get that.
But for us, it's still like, how are we going to keep up? If anything, in my last press release, I repeated the 30% penetration at the end of the decade. But then in my written, or I guess my comments that were not in the press release, I mentioned that people are saying it's going to be almost that in 3 years earlier, or 50% at the end of the year. Mm-hmm. If you say it's 50% penetration, 50 million cars in 2030, my TAM doubled. do I think it'll be that? I don't know. I mean,
Well, California, there's a second part of my question. California and New York put out legislation by 2035. You know this, I'm sure. No
Yeah.
new sales of internal combustion engines.
Absolutely.
Have you seen those decisions impacting already any of the conversations you're having?
Well, it's very clear that folks like, VW, obviously Ford, GM, the infrastructure, they're not bluffing. I mean, they're like, how can I get more electric vehicles? How do I do the engines? How do I do batteries? How do I do inverters? VW was at, VW Group, who is Audi, VW, and Porsche, and they actually have, I think, a Brazil low-end model. They are working on a platform to basically build these electric vehicles where the platform extends across the whole family. So you could have a Porsche Taycan that might have the same base subsystem as an Audi, okay? What it means to us is they're actually planning to make one inverter and maybe two. So all of their cars, their entire lineup is going to be based on the same inverter module. They're going to build the module. They're not going to buy it from any of the suppliers. They're going to buy known good die from all the suppliers. And they're going to need a lot of it from at least the top 3 manufacturers. They're forecasting more silicon carbide themselves than the world will. It's like 4x what the world's built last year. Okay, just them. And they have 10% market share of automotive. And they're out there beating on it. That was at this Munich show. And they're saying, you guys need to figure out how to give me KGD. And you might imagine that we have our finger in that, okay? Because if they're going to need KGD, they have to do burn-in. And they're going to have to do stabilization of the VTH, and they need a lot of it. And we would like to be that guy.
How big do you guys need to be, say, by 2030, 2035? You mentioned some expansion that you want to do, or some capital improvements at a couple, $3 million.
Yeah, I mean, it's sort of mouse nuts. Sorry, but I never. But it's still going to be several $million bucks. Maybe it'll be 5 million. I will see what happens. But it's not. We're not a capital intensive business. It doesn't take very much to build. From a capital perspective, you need inventory and you need some people and you need great subcontract manufacturing. You need a great supply chain. The supply chain and design we have of this is something I did before at HP. Agilent and Verigy, that was the same test group spun out. I kind of worked for the same company over 30 years. It just changed names 3 times. This is what I did when I was building testers, several $100 million a year. The actual manufacturing supply chain and assembly test looks identical to what I was doing in memory. So I'm very familiar with it. And in some ways it's better than it. And so that's why Larry always talks about me in memory. That's my whole background, and I'm very passionate about that. And that's something we'll be talking more about in time. But this thing can scale. And, could I go build 10 chambers a month? Absolutely. That's, the ASP of a chamber with a set of wafer packs is between $3 and $4 million. So it's like, Gayn, you just said you can do $40 million a month. Absolutely. Now, will the demand be there? Well, you have to go through the math. There's some evidence that the demand could be there. Now, we're not forecasting that yet. I don't want to get ahead of myself, but I communicate like that to my customers because they might be doing that. See, the silicon carbide itself, I think it's already expected to be something like, I don't know, $20 billion or something along those lines. Normally, test costs, or test capital budgets, they used to always run around 2 to 5% of revenue. They're a little less than that right now, but 2% of revenue of $20 billion is a lot of money, right?
Mm-hmm.
So, and certainly my lead customer is spending more than that, and it's paying off. They're differentiating based upon quality and modules and wafer level burn-in. That's a big deal.
All right. I think I'm done with my questions. We have a question from Tony in the chat. The testing kits you provide, these are universal, say, for cell phone chips, or are these catered more towards EV?
Well, the platform itself, the Fox XP platform, is, from a tester perspective, capable of testing any wafer, any semiconductor. And the contactor itself is scalable. I could put thousands of pins. I could test memory devices or logic devices or, cell phone chips, if you will. Now, depending on the device, it may or may not have more, the need for it for wafer level burn-in, right? It turns out some of these devices, you then put them into a package and they don't even, their infant mortality rates are low enough that you just put them in a cell phone, and if it dies in 200 hours, so be it. And I would say cell phone chips are exactly that. There's no evidence that anybody does production burn-in of a cell phone chip today, okay? And the reason is the infant mortality rate is low enough that in a consumer application, even for Apple, they don't burn them in, right? Now, silicon carbide's infant mortality rate is multiple orders of magnitude higher than that cell phone chip. In an application, that's a real problem if it dies. And so, to us, we're kind of looking for certain things that are like that. DRAM, dynamic random access memory, the main memory in your computer. It exists in your phone. It's all burnt in today, 100%. It's all burnt in at package. Nobody has shifted to wafer level yet. NAND is burnt in when it goes into solid state hard drives. It's mixed between package part and some wafer level today. That's what Larry was talking about yesterday. And what's our intent to go after that? And we talked about it. One of the critical aspects is we need the automation that will be shipping at the end of this year. So there are several devices. All AMD and Intel processors are burnt in. So it's not every device, but there's some big ones that have some big market opportunities, and they, in some cases, going to wafer level makes a ton of sense. And there's a handful of markets that are real opportunities for us.
Awesome. All right. Well, I don't see any other questions. So, let's take this very last question, and then we'll call it a day. End a little bit early. Tony, so you can do testing for AMD CPU here. He asks.
Yeah. So in practical means, and I've looked at this very clearly, it makes a lot more sense to do CPU for Intel and AMD at package part. They have massive pins, many of which are tied to power and ground. It's a technical thing. So you might, these processors might have 1,000 pins on them, and they might have, up to 500 devices on a wafer. A 500,000 pin probe card is just not financially feasible. And so when we've talked with those guys before, who continually have conversations, it's more applicable to, how the Intel is doing these heterogeneous integration, where they take a processor and a memory and they put it onto a substrate. The other pieces of that pie are more applicable to wafer level burn-in than the CPU itself. I'll just leave it at that. So there are opportunities, but the CPU itself, I would definitely not recommend to do at wafer level. You're going to have to do that at package later and deal with the fallout.
Okay, excellent. Thank you so much, Gayn. Any closing comments?
Listen, I appreciate you following us, and I'm happy that it sounds like it's worked out well for you guys as well. We're out here working really hard for our shareholders. We're going to continue to do that, and appreciate your support.
Awesome. Thank you. Thank you for your time, Gayn.
All right, take care. Bye-bye.
Take care. Bye-bye.